Hey Jesse, this is your instructor, Emily. Since you don't have access to Blackboard, what I'm going to do is just do a quick video of the review assignment. So you can pause this as often as you need to be able to read everything. So this is the first one. It just has a lot of statements about various things, and then it asks you questions. This also has a video. I'm not going to run the video right now, but it also has one. So the first question is, use the following amounts to calculate net income. If your assets are $165,000, dividends are $9,000, expenses are $61,000, etc. So, of course, net income equals income or revenue minus expense. So you can determine the answer. And if you just want to put number one and then write down your answer on a sheet of paper, you can give that to me and then I'll grade it. Okay, so let's go on to the next one. This is the same information at the beginning. There's just a different question. So it says Catalina Corporation begins the year with a $195,000 balance in retained earnings and $320 in common stock. They tell you how much the net income is, the additional common stock issued, and what dividend was paid, and they want you to compute total stockholders' equity. And your choices are $515,000, $584,000, $589,000, and $594,000. All right, next. This is the third one, same statement as before. The balance sheet, and then you just have to choose the right choice here. Presents the financial position of a company at a point in time, indicates if a company is profitable, shows the net change in cash over a period of time, or reports the difference between revenues and expenses. All right, this is another question regarding that same information. Net income appears in which two financial statements? So, is it the balance sheet and the statement of cash flows, the balance sheet and the statement of stockholders' equity, the income statement and statement of cash flows, or the income statement and statement of stockholders' equity? Okay, so this one shows balances for a company at the end of December, and they want you to pick out the accounts that you need from those to prepare the income statement. Okay, so you can just write this out on a piece of paper, and again, there is your input. So just choose only what you need for the income statement. Okay, this is the next one. You're going to be preparing a statement of stockholders' equity, and here's your information. It tells you the beginning of the year, common stock balance, retained earnings balance, tells you how much net income they report for the year, dividends, and how much additional stock is issued. And then you're going to prepare the statement of stockholders' equity. Again, here is some information, and you are going to prepare the balance sheet, which isn't showing right now because of an error. But the balance sheet, of course, is going to have your assets on the left-hand side, and on the right-hand side, it's going to have a section for liabilities and stockholders' equity accounts. Okay, so here's some information. I need to make this screen a little bit bigger. Let's see if I can do that. Okay, this is number 8. Again, you have some information and more information about the balance of common stock at the beginning of the year, retained earnings, and how much stock was issued during the year and how many dividends were paid. And you need to do an income statement and a statement of stockholders' equity. Okay, so there's your format for each one. All right. Number 9. Probably don't need to read this to you. You can pause it and just read the information for yourself. And again, we've got the statement of stockholders' equity, and this time a balance sheet. Number 10, here's your information for number 10. There's an at here, right here at the end, at the end of the year. All right, so you need to prepare the income statement, statement of stockholders' equity, and balance sheet. So income statement, statement of stockholders' equity, balance sheet. Okay. Number 11. So this is giving you some information. It's going to ask questions, comprehension questions. So here's the first one. Palmer Corporation borrows $40,000 cash by signing a note with the bank. Which of the following statements correctly shows the effect of this transaction on the accounting equation? Assets will increase by $40,000, liabilities will increase by $40,000, and stockholders' equity will remain unchanged. And now there are the rest of your choices. Number 12. So same information. Now the question is, Bell Company purchased supplies for $700 in cash. Which of the following statements correctly shows the effect of this transaction on the accounting equation? And there's all 4 of your answers there on one screen. I could get them in on one screen on this one. All right, and another one similar to that. Amber Corporation provided services to customers on account for $26,000. Which of the following statements correctly shows the effect of this transaction on the accounting equation? And you can almost get them all in. I'll stop here for a minute. You can pause and look at the first 3, and then there's the last one, and that is number 13. Now number 14. So it's going to show that, show the video on the statement of the accounting equation, and then how that breaks out into more expanded accounting equation. The question is, Beta Company paid utilities expense of $2,000 for the current month. Which of the following statements correctly shows the effect of this transaction on the accounting equation? And here are your 4 choices. All right. It's again about the how to record this transaction. This is number 15. A company borrows cash from a local bank. The company records this transaction with a... Of course, this is just talking about one side of the equation, but which one of these is correct? Okay. Number 16. Timmons Corporation purchases office supplies for $350 in cash. How would this transaction be recorded? And there are your 4 choices. Number 17, Callahan Corporation provides services to customers on account for $900. How would this transaction be recorded? And your 4 choices, and that is number 17. Number 18, Livingston Company pays utilities of $2,500 in cash. How would this transaction be recorded? And your choices for answers. Number 19, in preparing journal entries, it is acceptable for the amount of total debits to be higher than the amount of total credits. True or false? On March 1st, Glenn Corporation borrows $25,000 from the bank. Provide the journal entry for this transaction. Okay, so you're just supposed to write out what the journal entry looks like. And that's number 20. On April 7th, Carlton Company purchases supplies for $600 in cash. Provide the journal entry for this transaction. And again, write out the journal entry in this format. On January 5th, Fairbanks Corporation provides services on account to customers totaling $10,000. Provide the journal entry for this transaction. Number 23. On May 5th, Blackwell Corporation pays $18,000 in salaries for the current month. Provide the journal entry for this transaction. Number 24. Trial balance is a list of all their accounts, of all accounts and their balances. Debits must equal credits. Okay. And here is your knowledge check. Below are the account balances of Harrington Company at the end of October. Prepare a trial balance indicating whether each account balance is listed in the debit column or the credit column. If no amount is needed for a sale, then enter 0. So they've got your accounts listed and they're telling you the balances. You just need to place those balances in the correct column. And then, of course, total them up. All right, here is a cash T account. First, you need to compute the balance of the cash T account. And then specify which of the following transactions would have resulted in the $4,100 posting to the account. And there could be more than one answer. So the $4,100 posting to the account is this debit. So they want to know what types of transactions could have caused that. And then, which of the following cash transactions would have resulted in the $1,750 posting to the account? Same idea as the previous one. All right, that's all in number 25. Number 26, and I have less than a minute to wrap this up, so I'm going to go fast. Here are some transactions that happened for the Wolfpack Shoe Company, and they want you to analyze each transaction according to the accounting equation and how much each classification would increase or decrease. Number 27. Here is another listing of transactions, and you're supposed to do the journal entry. All right, I'm going to have to finish this in a subsequent video. Okay?